Is the US dollar losing its dominance as a global currency reserve? Take a look at this next report to see the transition of global central banks over the past year or so.
As we head into 2024, the dynamics of geopolitics is at the core of global markets. So far, America has imposed sanctions against countries to cut them off from the global payment systems and dollars. This has many countries looking at alternatives to the dollar. The latest International Monetary Fund's data shows a decline in the dollar's share in global central banks' foreign currency reserves. The data shows the dollar's shape is down to the lowest in the September quarter since the final 3 months of last year. The extensive use of dollars in international commerce, particularly for commodities and energy, has helped the greenback over the years. The dollar has been the preferred reserve currency for the majority of the world's central banks. However, the dollar has been progressively losing its dominance since 2000, when its share was above 70%. The US currency's share is down to 59.2% in the September quarter, the lowest since it fell below 60% last year. The euro's share in the reserves also fell slightly, while the Japanese yen rose. The shares of the Chinese yuan, the British pound, the Australian and Canadian dollars, and the Swiss franc were little changed. A group of other currencies, including the rupee, rose in the previous quarter. What does it mean to global trade and currencies? This reflects the global mood towards the dollar and the US. Most countries are slowly but surely moving away from dollar-dominated trade. Instead, they seek to settle their trade in their own currencies. India, for example, has set up a rupee trade mechanism for trade settlements. The mechanism is slowly gaining traction. But the dollar's share is still over 50%. So, it will take a long time for other currencies to be able to overshadow the greenback. Still, the shift away is clear and noticeable. Bureau Report, WION, World is One.
And for more on this, we're now being joined by Dr. Suyash Bhatt, Director at AFTI, live from Dubai. Welcome to the broadcast, sir.
Good morning, Amy.
Now, Dr. Bhatt, is geopolitics hurting the dollar's dominance as a global reserve currency?
Yes, definitely. I believe in last 3 or 4 decades, a lot of things have changed. In 1970, it was almost 85% of global trade, which used to happen in dollar. And as your report suggested, rightly, it has reduced to 59.2%. And the balance is done in euro in 19.1%. And you would find that there's a significant change that even central banks are approaching since 2022. Especially from November onwards. So if you see the Central Bank of China, it used to hold $1 trillion worth of US Treasury bills, and it has brought it down to $852 billion in 2023, the year end of 2023. And it has started moving away from holding US Treasury or US bonds and started investing in gold. And this, I think, in general, you would find that even at the beginning of the Brazilian president's visit in China, he said that he popularly made this comment that, why should we all trade in US dollar? So there is a dramatic shift that all central banks across the world are moving consciously away from dollar towards an equivalent replaceable standard, and most likely it is gold, because almost the last 50 countries in last 1 year, 50 central banks have started accumulating gold as an equivalent. And you would find that even China has added close to 188 ton of gold in last 1 year time period. And this is a consistent move. And apart from that, as we said, that rather than pegging your currency to dollar, most of them want to peg it against either gold or any other equivalent. And most of them are also getting into bilateral trade agreements. So say, for example, if I'm China and I'm exporting goods to you and I'm buying oil from you, So I would pay you in yuan and you pay me back those yuan to buy cars or whatever else you have. So why should we have a third currency in place? And which is what was also done by the Chinese premier when he went to Saudi Arabia and signed a landmark bilateral treaty with them. And, and over a period of time, you would find that this gradual shift away from dollar is the trend which most countries are trying to adopt by settling in their own currency rather than converting it in dollar.
Right. Now, Dr. Bhatt, I believe it's also important to understand if this current shift away from the dollar, if it's temporary or a long-term move.
So it is clearly from the data, if we see it's a long-term shift which is happening. And it is more because it's not simply not convenient now to trade in dollars. So you still have mechanisms like SWIFT, IMF, and World Bank, which was set up basically to promote dollar-based transaction or internationalize the dollar. But in last 4 to 5 years, you would find that the U.S. government has recklessly started borrowing and also printing money. Imagine a country like China, which has spent 40 years in creating industrialization and accumulating 4 trillion US dollars worth of reserve. And in just during COVID time, the US government prints 7 trillion US dollars. So it's losing its value more because of what the US Fed is doing in terms of recklessly borrowing and also printing money just to save the American economy, which is a big problem globally because those who are trying to accumulate this precious dollar feel that it has no more any value, because if you keep printing the money, your value should go down. But as an exporting country, if I appreciate my currency, I get punished. So I cannot do that. And the only way you can come out of this is by de-dollarization. And that's why you are seeing most of the central banks moving away from this as a global tradable currency and trying to find an equivalent, which was the case before 70s during the Bretton Woods system, where gold was the standard. Yeah.
Right. In fact, I was just going to come to this just for better clarity on this. What is the impact of central bank digital currencies on de-dollarization?
So that's a very good point. And in recent 3 to 4 years, you're finding that most of the central banks are now trying to find an equivalent replacement for dollar in terms of creating our own central bank digital currency. So a central bank digital currency typically is a same, instead of issuing a physical currency, you would have a digital currency, but it's based on the cryptocurrency platform or a framework. And it makes it easy for cross-border settlement, because if dollar has a SWIFT, we need to have something similar to have a cross-border settlement system. So if we want to shift away from dollar, you need another payment settlement system. That's why you'll find that the Indian government created this digital rupee initiative and is going out and trying to sign a bilateral trade agreement with UAE and other countries. Same is the case with China. They have their own digital payment settlement system, and they are trying to go in the biggest of trade happens in oil. So signing up with Middle East countries to have their local currencies accepted. So as central banks move away from dollar, they need a payment settlement system, because right now, if you want to trade in SWIFT, you need dollars. So unless you have your own payment settlement system, you can't do that. And that's why you are seeing more and more countries issuing their own central bank digital currency, like e-krona or any other currencies you'll find that which Swedish government has issued, or even Indian government coming up with these digital payment systems.
All right. Dr. Bhatt, thank you so much for joining us on World Business Watch with your insights and your perspective on this.
Thank you.